On the business desk at this hour, our attention remains on the upcoming medium-term budget policy statement where a fiscal and social relief balancing act is expected. Now, Finance Minister Enoch Godongwana will be delivering the mini-budget on Wednesday at a time where the domestic economy is facing local and global pressure. Economist Isaah Mhlanga speaks to us now to expand on this topic. Thank you so much for your time as always. I think let's first start with the good news. South Africa currently is seeing improved taxes still, but what is more important is what the fiscal purse currently looks like and the state of health.
Indeed, if we look in terms of the fiscal position, it's likely to come out much better because the tax revenues that have been boosted by commodity prices have boosted tax revenue collection, which means Minister Enoch Godongwana will have extra tax revenues relative to what was penciled in February budget. That is good. But we have also had some unexpected expenditure line items that are going to come through. The most important thing is this is not a budget. It's a policy statement. Essentially, government's intention over the next 3 years on how it's going to structure policies to boost economic growth. But also it is an adjustment budget in the sense that it's going to take into account the unexpected expenditure line items for the current year and say, where do we need to plug the gap and where do we get that funding? Fortunately, the extra tax revenues that were not budgeted are going to be just enough to take care of the big adjustment that needs to be taken care of.
Let's get deeper into those adjustments. Where are the plugs that really need to be closed, especially when it comes to unexpected expenditure? One of the big debates has become how South Africa funds the basic income grant.
Indeed, we see about 4 key themes that should come out of the budget. Firstly, it is how government is going to deal with Eskom's debt reduction. There is a wide expectation that some of Eskom's debt, particularly that one which is guaranteed by the state, is going to be transferred to the state's balance sheet to enable Eskom to be financially sustainable and so that it can go into the market and borrow on its own balance sheet. That's the first thing. Secondly, it is the detail, the quantum, the structure of the climate financing. Remember that $8.5 billion that have been placed by the rich countries to enable South Africa to transition to a greener economy. I think that is also a big item. There is an expectation that we should get some detail on that. Whether that debt, if part of it is aid or part of it is actually debt that the state will ultimately have to pay back, we need to get an understanding because that will impact on the fiscal position and therefore the credit rating of the country. And then the third one is on what happens to the social relief of distressed grant, that COVID relief grant of 350. Does it get extended by another year? Is it made permanent to a basic income grant? We do not expect that it's going to be made permanent. We expect an extension by another year going forward beyond 1 year to remain unfunded, to signal to say this is not a permanent feature of the fiscus, it's a temporary relief. It's only going to be funded in subsequent years on the basis of future tax revenues if they become available. I think those are the 3 main things. The fourth one being an economic growth strategy that is going to generate jobs and reduce the number of people that are dependent on the state. That's what we would expect in this particular medium-term budget policy statement.
And understandably so on the latter, because you highlighted a short while ago that the medium-term budget policy statement is indeed a policy statement. So in terms of fiscal reform with regards to job creation, economic growth in South Africa, how tangible can we expect the 2022 MTBPS to be, given the current landscape of the global economy where inflation and recession is imminent?
Look, there is no other choice except to continue with fiscal consolidation, essentially making sure that our debt is sustainable. We reduce our interest costs because they crowd out public investment, which ultimately can generate growth. So we expect National Treasury to hold the fort on fiscal consolidation. only using the extra tax revenues to really take care of the necessary spending that cannot be avoided, and anything else that is left to reduce the amount of debt that we have, because that reduces our interest cost in future. That is really quite important, particularly for credit ratings, because there is still quite a lot of expectations that are not necessarily well understood in terms of what Treasury is going to do. That is going to determine our fiscal position, and that is also going to determine our credit rating. And mind you, we are now in a global environment, as mentioned earlier, where expectations are for 1/3 of global growth to be either in recession this year or next year. That means commodity prices might not continue to be supportive of economic growth as it has done over the last 2 years. And already we have seen them coming off quite a lot from the peak that we have seen, which means those terms of trade that helped the mining sector and the financial sector to really grow over the last 2 years might not be there next year, which then tells us that we should not see a national treasury that takes a path of fiscal adventurism, where any extra tax revenues is used to fund current spending, which we can delay, because that is going to take us out of the fiscal consolidation path that we have signaled to the market, and that will be disastrous. We have learned from the likes of the UK, how not to do fiscal policy, and I think over the last 2 years, Treasury have done the right thing. We expect them to do the right thing this week.
And on that note, as the former Finance Minister Tito Mboweni had warned of a fiscal cliff in South Africa, how far are we from that, especially when it comes to expenditure and dealing with the current debt that we have?
Look, we are far from that. We are not expecting any fiscal cliff as long as we don't crystallize big expenditure line items that are not funded, such as the basic income grant. If it is just temporary and targeted well to those that need it, I think that will suffice. But over the long term, we need economic growth. So we need policies that continue to make sure that the private sector can operate, businesses can be started, and more tax revenues and jobs can be created. That is the more sustainable way to ensure that we have fiscal sustainability and an economy that grows.
Thank you as always for your insights. Isaah Mhlanga is an economist with Alex Forbes talking us through those expectations ahead of the medium-term budget policy statement that will be delivered by the Finance Minister in Parliament this Wednesday.